Hi, this is Zach Meir from Zach's Traders Cafe with a look at some bulletin board hero stocks on Wednesday, the 11th of May. Starting off with Armadale Capital, where we've got this first signs of a turnaround. End of day close back at 2.5 pence, which was the former support for the start of 2016. If you're cautious on the shares, maybe you wait for an end of day close back above the grey 20-day moving average, 2.6 pence. And RSI 50 plus versus 43 at the moment. That would take us to an implied target towards, say, 3.25 pence over the next few weeks. And then after that, on a 2 to 3 month view, looking for the 200-day moving average at 3.74 pence. Next up is a stock which has been perennial favourite of mine as far as being proxied with the gold price. Hasn't quite delivered yet. What we've got here is this broadening triangle in place since December. Support line currently holding around the 2.5 pence level. Probably the other point to note is this low of 2.8 pence in April. We're back above that now, and that gives us a slight bear trap rebound idea. The idea is that we would head back towards the initial May resistance around 3.75 pence over the next 2 to 4 weeks, especially while there's no end of day close back below the initial May support at 2.56 pence. After that, obviously, weekly closes above the 50-day line could take us up towards the long-awaited 6 pence zone, which is where the 200-day moving average is now. On to Cyan Holdings, and here we've got a stock which was used to be a favourite, then decided that it wasn't really going to play ball, didn't want to play ball. We had that decline round to the, 0.12 pence at the beginning of last month. But since then, we've been flying a gap through both the 50 and 200-day moving averages, which is effectively a very big reversal signal. It's obviously equal and opposite to that gap down that we had in June. The view now is that at least while there's no breakback below the 20-day moving average 0.27 pence, we should head as high as the top of that 1-year broadening triangle at 0.45 pence relatively easily, closing above that old 0.32 April peak. Obviously a great plus point for the bulls yesterday. Going on to independent resources, and here we've had obviously a very difficult situation with this stock. Yesterday a bit disappointing in the sense that we weren't able to hold the 50-day moving average, but if we can any day this week, one would be hoping for a journey at least up to 0.15 pence, and then after that you can name your target towards the 0.4 pence and towards the 0.45 pence of the 200-day moving average at the moment. Stop loss obviously back below 0.07 pence. On to another stock which is back in business after an extended hiatus, Minco. This is looking very encouraging in the sense that we've got this crawl at and around the 200-day moving average at 0.2 pence and then the spike higher. That gives us the impression that the shares are in a rising trend channel along the lines of what I'm drawing at the moment. 0.34, the top of that channel there from November. And that's particularly valid while there's no end of day close back below the 200-day moving average. On to a perennial favourite of many investors, a stock which carries many people's hopes with it, Extract Resources. So far a bit disappointing as far as May is concerned. We've had a few failures here at the 200-day moving average, 0.2 pence. That suggests that we need to see at least an end of day close above this feature before calling the shares higher to point towards 0.4 pence. End of day close above the 200-day line really is the requirement, especially given the way that we failed in the same way in January to clear that trend shaping feature. So wait a bit longer on that. And the other way around though, any dips towards the 0.515 pence area could be regarded as a bottom fishing opportunity, as it has been buying near that August support line over recent months. On to the last stock of the day, which is YOLO, which has been interesting stake building at. Here we've got the shares finally reversing after extended losses. Probably still, though, need to see an end of day close above that 50-day moving average at 1.13 pence. That's the blue line. We haven't really been above that since the this time last year. So really higher a break of the 50-day line, than maybe even a higher low above that feature required to gather confidence that the shares are going to be able to head back to the 200-day moving average zone at 1.58 pence. That's it from me. More updates at the same time tomorrow. And don't forget, the next Zacks Traders Cafe at the London Capital Club is tomorrow at 5:30. Register for that. You can see it on my Twitter feed at Zacks Traders Cafe.